Long story short, it's going to be a kick in the guts for Boeing because before all of the mess with the 737 MAX program, it was about 40% of 737 deliveries, and the 737 is one of Boeing's bigger selling commercial airliners. There's been a rough couple of years for Boeing, to put it lightly, because they recorded their biggest full-year loss in history last year, losing 11.8 billion US dollars. Their total losses since 2019 have been more than 35 billion US dollars, and their production of the 737s, the MAX program, has been dramatically slowed. I think it's capped at around 38 jets per month due to the FAA's kind of crackdown after the MAX 9 Alaska Airlines blowout last year, which was reputational damage, not even getting to the reputational damage that Boeing has suffered. So a lot of Boeing's problems have been self-inflicted, but this is not going to help.
How big a financial blow is this? We know that Chinese airlines have more than 100 Boeing jets on order for the next couple of years. Could these surplus jets make their way into other international markets?
Yeah, so Boeing had 27, I believe, MAXes, 737 MAXes, earmarked for China this year. Now, this is alongside some 787 Dreamliners and some 777 freighters. I think 10 of these planes were already built and were sitting around awaiting delivery. So it's probably going to, how much of a financial blow I can't really say, but and I don't know what Boeing's internal processes are for dealing with this sort of situation, but potentially we could see, some of these planes make their way into international buyers if the processes allow for it, of course. Virgin Australia in particular might have an opportunity to swoop on some of them, considering that they have a big backlog of orders for the 737 MAX 8. They actually converted some MAX 10 orders to MAX 8s last year because of the problems getting the MAX 10s out. They haven't been certified yet, for example.
Okay. There are also reports that Beijing has banned Chinese airlines from buying aircraft parts and related equipment from US companies. Will that have implications for the maintenance of Chinese airlines and potentially safety?
Yeah, it could. Obviously, with global supply chains the way that they are, the world is really interconnected in terms of aviation parts. Now, I will say that a lot of Chinese aviation market is Airbus, so less of a problem there potentially. But in terms of Boeing, I think that the Beijing has been talking, at least according to Bloomberg reports, about assisting Chinese airlines who are taking a financial hit. But in terms of the whole parts for maintenance and safety, we need only look locally to Rex, which flies a fleet of Saab 340Bs. Now, there's a very old aircraft type that is no longer in production, and so parts for those are harder and harder to find. And we're seeing, whoever ends up buying Rex, even if it's the government, will have to seriously consider about renewing Rex's fleet, because eventually there will be no more Saab parts to go around. And China potentially could face that same kind of problem.
Now, Airports Council International had forecast China's aviation market could become the largest in the world before 2035. Could China's ban slow the expansion of its own domestic market?
Potentially. It sort of depends how many orders that Chinese airlines have kicking around. It could depend on how many are coming from Airbus, which again would not have those same problems. It could also depend on how well their own homegrown aircraft company, Comac, can ramp up production, because they would have their own problems with supply chains.
Okay. Can you explain Comac's ambition?
Yeah, so Comac is looking to become basically the third major player in commercial jets. They're their own, the homegrown, as I say, company founded in China by the Chinese government. They've got two jet types in service at the moment. There's the C909, which is a regional jet similar to your Bombardier CRJs or your Boeing 717s. And they've also got the C919, which is their newer aircraft type that's meant to compete with the Airbus A320neo and the Boeing 737 MAX series. Now, the C919, essentially the same product. It's similar in capacity, similar in size, similar in wingspan. Engine's not quite as good, range not quite as good, less fuel efficient. But one issue that Comac might face is that a lot of the parts for these C919s come from overseas. You know, in particular, the engines are supplied by CFM, which is a joint US-French company. And so some of those engines, some parts of those engines are assembled in Ohio, other parts in France, and you'd have to expect that the parts that are coming from Ohio might be a bit more difficult for COMAC to get their hands on.
Okay, well, something we haven't touched on is what this means for Boeing's largest competitor, Airbus. Are the implications for Airbus all on the upside?
Depending on how quickly Airbus can ramp up production again, because Airbus has a massive, massive backlog. I mean, looking at the backlogs at the moment, Boeing's got a backlog of 6,300 planes. Airbus has a backlog of around 8,700 planes. So 10 or 11 years of production for each of those. So Airbus accounts, I believe, for 55% of the Chinese aviation market. Now, that includes the A320 series, A330s, A350s, I believe, and freight aircraft and helicopters. So, and I think Airbus, about 20% of Airbus's order books have been from China in recent years. So definitely quite a bit of opportunity for Airbus there. But again, we fall back to these supply chain issues that are choking the supply of aircraft for airlines all over the world. I mean, you only need to look at the difficulties that here in Australia that Qantas and Virgin have had sourcing airlines. And of course, that was a major reason for the failure of Bonza last year in that they could not get aircraft. It's also a reason why Virgin took over the leases of a couple of Rex planes when Rex's jet operations went into voluntary administration.
Interesting times in aviation. Jake Nelson, thank you.
As we say, it's got its ups and downs.